You like it, do you? The old David Letterman thing where he run across the thing real quick and run back and that now before the show. Yeah, no, he kept the show. Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? Where'd you go? Oh, you're over there. Welcome to the Closing Beat, a daily stock market update show that we like to do here for you in the Jazz Wealth Studios. It's an actual studio. Yeah, we do things a little differently here instead of being the stuffy advisor with the fancy. Now, we have offices, but we don't, they're not the fancy offices and stuff. We just keep it nice and simple here, focused on your dough. The show here, if you're brand new to us, we go over the stock market and interesting things that are happening. The big thing that everybody's focused on right now is the Jackson Hole meeting, which is currently underway. But the Fed President, Jerome Powell, he'll talk tomorrow. Basically, by the time you get up, everybody will be focused on things like that. Now, you have Fed presidents getting a little head start on him there, saying that, things need to stay as they are. Rates need to continue to rise. Inflation needs to continue to drop, right? So there's a high likelihood that nothing happens tomorrow, right? That's basically what people are starting to price in. That's why you saw the stock market just ease up a little bit. Granted, as you saw in the title, it's about on 40% less volume than normal. It's typical for this time. Last couple weeks in August tend to be really quiet, and we're seeing that with the stock market. Add to that, we have Mr. Powell talking tomorrow, and so people say, well, I'll just, just going to hang back and see what happens on a Friday. Now, I got some stats for you to share in just a little bit there. But if you like our wine and wealth classes, check out last week's class that Eric did, 5 mistakes that people make in Nest Egg. We've done lots of videos on that, by the way. You could just search Nest Egg in there. There'll be no wine and wealth tonight because we're gearing up for September, the whole month of September for clients. We're actually going to be doing the geeky side of retirement planning. So things to help people that are about to retire, currently retired, all that fun stuff that we could do to add value to your accounts. That starts September, right? So we'll be looking forward to that. And we're doing extra classes and maybe a few extra things that'll be different than what you're used to. Our FinTips videos all August have been in preparation for that. So if you're in or near retirement, hopefully you'll check that out. Hello to everybody out there. I can see your chats now. Hanging out there, man. I normally can't see that, but I can see it in there. The truck's inside today. You can see it? Oh, you see it over here. Yeah, there's the little guy just peeking in there. It's technically a fire hazard, we've been told. So hopefully there's no fire. Anyways, look, let's take a look at the stock market. You've got the S&P on the screen there. Small little rally after seeing a pullback here, a very normal pullback that nobody's really worried about at the moment. It seems like nobody's worried about it. You got a small rally here, but on very, very low volume. In order to break out to new highs, you need volume. Why do you need volume? Because that shows you there's a number of participants that all believe the same thing. So moving higher on lighter volume is, kind of like being in a glider, right? You can stay up there, but you can't stay up there forever unless more people, or unless you have an engine to eventually help you out. That was a bad analogy. Anyways, like I said, that starts tomorrow with Jerome Powell speaking there, and it's largely expected to be a non-event there. Anyways, just out of curiosity, I had a client say today, man, should I get some money invested? I actually had a couple clients say that. Should I get some money invested before the Fed? I don't want to miss out if it goes higher. So I thought, well, what does the market generally do around the Jackson Hole meeting, which is currently underway? So what we did is we took there's nothing really to show because there's only one number. We took the performance from the close before, which would be Wednesday in this case, to the close after, which would be Friday in this case. The average performance over the last 20 years for the stock market during the Jackson Hole Fed meeting, the big showdown in the mountains, is 0.4%. Positive, 0.4%. If you go back to when they first started this, 1979, from what I found, the average performance is negative 0.2%. So it's basically an even Steven, right? So when you look through performance, the Jackson Hole event happens right before September. The stock market tends to give you a little bit of a bump, nothing impressive to really try to show you or be excited about. We trade sideways through the month of September. Then you get that year-end rally, which I hope happens this year for you guys. And so as far as the S&P goes, 0.4%. We could certainly see something above average, below average, whatever, but that's where you stand if you were to only play the Fed get together in Jackson Hole. The worst performing asset class is the 10-year. The 10-year yield tends to fall. Not by much, right? By basically 0.02%. 0.2%, sorry. So that would be your worst performer, and it's because we're talking yields. We're not talking about actual returns here. But other than that, there's not much. I don't have much to go on for you there. The median performance in the S&P is 0.42%. So the average is 0.4, median is 0.42. That tells you there's not a lot of action going on both sides. There's no real significant outlier events. And people say this time's different. Is it? Going back 20 years, go back to 1979 if you want. Was there no like crazy times during those times? Of course there were. There were many, many crazy times there. So anyways, that was a brief one. Just wanted to point that out to you. Let's get on with the get on here. So looking at the stock market, you of course see the S&P on your screen there. I'm gonna go back a screen because I went off the wrong thing there. This is the S&P futures. If you take a look there, the S&P is down about 12% year to date. That includes today's rally, so gaining back some of those losses year to date. The NASDAQ is the worst performer. If you're wondering what discounts you have in the indices there, you have the NASDAQ being basically 19.5% lower year to date. Remember, the year to date, the start of the year, was basically the top of the market. So oftentimes we interchange. We have a 19% pullback or 19% year to date. This is one of the few years you can get away with doing that. The Dow is the best performer there, and it was also higher today. The Dow's down about 8.3% year to date, and the Russell sneaking in with a rally today, by the way. Nice little rally there, down about 12% year to date. Now, in the S&P, go back over here. Let that catch up for a second. I mentioned volume a minute ago, 40% less volume than average. Actually, yesterday was the lowest volume day of the year, right? So that was a record low. Goes back to the same thing that the title of this class is, low volume. Do you want to participate in low volume events? No, that means you are essentially, jumping off the bridge without anybody else, right? Not saying that that's the analogy that we should use, but that's the concept. Everybody else is not participating. So if you're in there and participating, you are likely just participating with algorithms and all kinds of fun stuff there. So keep that in mind. Anyways, going back over to the S&P here for the day, anything that was a standout would be earnings related, and I'll cover that here with you in just a little bit. Salesforce, that was one of them, one of the major ones that came out today. A little bit slower growth than normal. Slack is doing really well for them. Not really anything horrible to say, but wasn't that typical Salesforce rah-rah kind of a earnings report that we normally see. So that one stood out. Dollar General, Dollar Tree, we'll cover those in a little bit here. Those are also earnings related. One good, one not so good. We'll let you guess which one. BMY is the same. Other than that, there's not much that was down today. Paychex was down a little bit, got a little ahead of itself, and is stronger than the market in general. But look around, you got Alphabet moving higher, Amazon, Meta, all of those doing really well. I want to point out the banking sector. The banking sector came in fourth place here today, but with a 1.5% gain. The banking sector being quite active around the Fed potential decisions or change in their language and things like that. Basic materials were the leader here today, really waking up lately, I should say. It's not the most exciting sector, but if you're looking for something moving quick, that would be where you go. And also, now it's one of the more beaten down sectors, but communication services also waking up and showing a good day here as well. That leads me to sector performance. Over the last week, healthcare, I'm just going to do a little review here. Over the last week, healthcare has given you the biggest pullback, right? So what does that mean? What do you do with that? If healthcare is giving you the biggest pullback, that gives those of you that like to buy momentum or relative strength, go find the stocks that didn't pull back in the healthcare sector. Those of you that like discounts, go find the healthcare stocks that gave you the pullback that was bigger than the overall sector there. But just want to point that one out. That one gets the prize for the biggest pullback. Communication services is a very, very close second. Energy, which by the way is your leading sector for the year so far. Energy is up 54% year to date. That had the biggest move and the only positive move over the last week. Look at that sucker. Just continues there. And you know what? Just a little sidetrack here. It keeps coming up that the ESG funds now are underperforming. So the average retail investor who kind of went towards the ESG route, I don't know many people that did that, they are now wondering, was that a good move? Because they're underperforming the market by a lot. And that's not a problem. I'm not saying that's a bad thing, but you know why that is. The two leading sectors here this year are energy, up 54%, and a very distant second place, but still positive, is utilities, 9%. Almost every other sector is down on the year. So you have an ESG fund that focuses on things that are other than fossil fuels and utilities and things like that. Well, it's got to be down. There's no, besides maybe ExxonMobil, there's no real chance for it to be up. So if you are an ESG person, I won't hold that against you or say that's a good or bad thing. I don't really care what you do. But if you are an ESG investor and you're going, did I make a mistake? Well, maybe, but for the moment, you being held back because the performance is coming from other areas in the market that they don't participate in. So on one hand, I say, don't jump ship too quick. But on the other hand, you go, well, look at the impact of what you miss out on, times that by however long you're invested in that, and make sure that's something you can live with. What else? I think that was it for sector-wise, what I wanted to point out. Energy is extremely overbought, by the way, so just keep that in mind. Actually, probably half of all the sectors out there are, overbought, right? So we have lower volume, we have overbought sectors, we have a recently overbought market, and I go back to my argument that maybe now's not the time to go rushing in and doing a bunch of stuff. There will be times, don't worry. The market's open all the time, except for all the holidays. Hey, stocks in the news. There it is. Amazon up 2% on the day. The company is unfortunately getting rid of their telehealth division. I forget what they called it. I can't think of the name. But I was kind of hoping they would do well with that. You would think that if anybody could make healthcare efficiency more efficient, that it would be Amazon. And unfortunately, Amazon, JP Morgan, Berkshire Hathaway, they all gave it a good go with their healthcare, collaboration. And man, it didn't work out. So I don't like to hear that, because I think we could all agree that we'd like some help with the healthcare stuff. United Airlines having some problems. Not a good time to have problems, but not the worst either. They're having some problems out there with their computers. It is disrupting flights. If you're out there and stuck somewhere with United Airlines, they're working on it, but didn't affect the stock today. Two stocks that were in the news because of earnings. Both Dollar General and Dollar Tree reported earnings on the same day. Dollar General, we'll start there. Sales up 4%. That was more than 4.6%. That was more than expected there. And they raised their full year sales estimates. Because I was looking for, why did Dollar General do considerably better than Dollar Tree? All right, they didn't both have amazing earnings reports, but there was no signs of trouble there. I said, well, what's the difference? Well, Dollar General has sales that were better than expected, and they said going forward they'll be better than expected. Dollar Tree, on the other hand, sales were up better than expected. All right, that's a good start. But going forward, they said, we're going to invest in pricing. I don't know what that means. Sometimes that means they're going to invest in their efficiency in their supply chain, which impacts their pricing. For them, not for you. Helps them keep their prices down. And sometimes what that means is they're going to lay off people, right? Which means they'll have lower costs, which means they can keep their costs the same. I didn't catch what the difference was with these guys or what they were doing, but they're going to invest in pricing. And because their sales weren't expected to do better compared to Dollar General, what happened? The money went to Dollar General. You can even see it. Both of them gapped down to start the day. If you're not a candlestick person, right here, right? Both of them gap down. You go looking through their earnings report and you go, hey, these guys expect things to continue to go well in its simplest form. You go over to Dollar Tree and you say, ooh, they gap down too, but they're investing in pricing. That means they're spending money on something. They're making an investment in something, which means the money's not coming back to me. It's not going to be showing up in the form of higher earnings for the moment. And so right here, You have Dollar Tree going, okay, let's take the money and go to Dollar General. That's the long explanation. You got Citigroup says they're not going to work in Russia anymore, and that was rewarded today with a 2% pop there. It will cost them, oh, I saw it somewhere. It will cost them $170 million to get rid of their Russian efforts, but they're doing it, man. They're doing it. I don't know where you guys stand on that thing, but a lot of companies leaving Russia. See how that goes. Williams-Sonoma. These guys sell really fancy cooking equipment stuff. I would know because it took me years to talk my wife out of buying the stuff that is clearly nice but overpriced. Anyways, they reported earnings there, and they're doing fine. They're doing just fine. Don't you worry about Williams-Sonoma. Up 2%. The recent rally, obviously well worth it. It very likely continues higher if you happen to read through their earnings. Everybody's got their thing, right? Those of you that spend money there, have fun. All right, so tomorrow, there's no real earnings. JK Solar is one of them. It may be a little more volatile because of what's happened recently here, but it's not known for being a real mover on earnings. And it's basically a coin flip, whether it'll be up or down on earnings. There's no streak or anything that I can give you there. Yeah. The OPEC production cut comments were clarified today, and so oil was down just a little bit, but not a big deal there. And basically Jackson Hole, man. Unfortunately, whether you care or not, that's what everybody's going to be focused on. The good news is, while you're watching them talk on, watch CNBC. They always pick a beautiful little mountain in the background. Oh, man, it's got to be great for tourism there. Anyways, I will take your questions here if I can, and then I will get out of your way so you can go do your thing. So I'm sure you got things to do. So let's see what we've got. Oh, you got some United Airlines. You want to add a little bit more. I don't see how you can argue a position in the airlines. Maybe some over others, maybe. But yeah, I mean, busy as can be, these airlines can't even keep up with it. It's good news. I mean, no signs of that stopping, even in slow season. Right? It's supposed to be getting towards the slow season here. Yeah. Craig says going to keep sitting a bunch of cash on the sidelines there, huh? All right. Politics make people make dumb decisions with their money. Agreed. Agreed. We vote with our emotions, which makes it easy to go into your wallet, right? And that's unfortunate. I yearn for the day where we vote for progress. Let's try something. If it doesn't work and half the people don't like it, well, we'll stop. We'll try something else. Just like a company would do. You supposed to be sitting on your hands? I would, yeah. Well, at least for, today, tomorrow, yesterday. Yeah, what's the point? What's the argument? If I sit down here and I tell you, I don't know, I think the market's going to go sideways. What do you have to bring to the table that suggests we're going higher? I got nothing. So there's no fear of missing out on, just going to take off without you there, I will be going there someday. The Grand Tetons through Yellowstone. I would love to do that. That's definitely on my list for sure. Yeah. What do you think of Verizon and all the downgrades? Was it yesterday that AT&T got hit with some? I believe yesterday was AT&T, and almost the same group came over to Verizon today. I don't have any comment on that one other than if you like a discounted stock, that's attractive there. But what are you, like a heavy in Verizon? China did well last night. Well, that does happen when you... it happens in the States, too, when we push out some kind of stimulus. The Chinese equivalent yesterday, which caused their markets to go higher, would be about $150, $160 billion in stimulus by pulling forward bonds. I don't know if you're familiar with what they're doing, but a little bit of, erasing on the old balance sheet and then shifting the numbers to a different year. Also, Baidu with the quantum computer, if that's real, whew, good job. See, they're making progress. They're doing things. Yep. What do you think about SoFi and the extension of the student loan moratorium? It's not enough to bother them. They're not like the Navient of the world, right? So, what it is. Yeah. Sitting on your hands. There you go. Gonna wait for something in September, huh? Palace lives in Vero Beach. Very familiar with Vero Beach. Yeah. Yeah. 3 lower. Oh, you go back now. Look at George coming with that. 3 lower lows, then a higher low. The argument was the wealth in Jazz Wealth right there. W, right? Can you see the W in Jazz Wealth after making 3 or more consecutive lower lows? Good job, George. George is watching. He knows the drill. That's an old video, man. That's good stuff there. I'd forgotten about that one too. Trying to find a way to make that interesting. All right, I'm going to wrap it up there. You guys enjoy the rest of your day. Appreciate you hanging out with us and subscribing if you would. We're trying to grow the channel, make everything a little bit more exposed out there. If you heard something good or you like what's going on here, I appreciate the subscription. And you guys enjoy the rest of your day, right? Enjoy. See you.